Hello, ladies and gentlemen. Good day and welcome to the show. Listen, I'm glad to have you here on this Thursday the 29th of April, 2021. Thank you for tuning in. Now, we're going to talk Bitcoin. And this is a serious show right now. And what could really affect Bitcoin? Bitcoin is getting to be in the mid to later stage of this particular bull rally. Now, Bitcoin's undergone many bull rallies since it began. And some people were like, when Bitcoin hit $100 for the first time, they were like, whoopee! But it was in a bull rally, you know? And this is a bull rally. And that's what Bitcoin does. Goes through a bull rally, and then it drops off again. And then it waits while it grows under the surface until it rises into another bull rally again. It's done this over and over and over again. These are very predictable moves for Bitcoin. And I've watched so many of these bull rallies going all the way back to when Bitcoin was like 40 bucks, 30 bucks. I've watched these bull rallies, watched them very carefully. Okay? And so I have a good feeling for these bull rallies where we are in the bull rally. And right now we're in the stage where, yes, Bitcoin's probably got some upside potential still to it. I'm thinking probably somewhere between 60 and 100,000 upside potential to it right now. But when it gets in this stage of the bull rally, it becomes very susceptible. Any little thing could be a tipping point to send it to end the bull rally and to go into this period that we always have between bull rallies where it's negative. Things are negative for cryptocurrencies instead of hot like they are and have been. Okay, so we're getting into the thickest part of the bull rally right now, and so Bitcoin's very susceptible. What could bring it down? Okay, that's what we're going to discuss, and that's what we're going to get into, and that's where we're going to open up the charts right here and take a look. St. Louis Fed president says central bank could discuss tightening policy when 75% of the people in America get vaccinated. We know the numbers going up really fast toward that 75%. It said in a rare public comment regarding the central bank's closely watched plans for easing off the corona crisis policies, the St. Louis Fed Reserve President James Bullard said Monday that the Fed could begin to have discussions about tapering its $120 billion per month bond buying program once 75 to 80% of the United States population has been vaccinated, a milestone, he said, that would indicate that coronavirus crisis is nearing an end. Okay, so I've been talking about this for a little while on my channels. The Fed going into a tightening, you know, and the thing is I think it's for the Fed. I think it would be the biggest mistake they ever made because all of these markets, not just cryptocurrency, but most all the markets. I'm going to say most because there's a couple markets that's not so vulnerable right now. But most of these markets are extremely vulnerable. The Dow Jones, the S&P 500, the Russell, all of them, they're extremely vulnerable right now to downside. I mean, they're perched up there in the air right now, these markets. Overvalued, unbelievably high. And there's nothing but air down below. I mean, they could fall without a bid, quite seriously. So the Fed talking about tightening, do you think they're going to do it? Yeah, I think they're going to do it. I think when they see inflation starting to heat up really seriously, they're really scared of inflation. Don't let them kid you. They're not so scared of deflation because they got the tools to fight deflation. They can kill deflation. They can, like Ben Bernanke said, they can dump money from helicopters if they have to. That'll kill deflation. But what tools do they have to fight inflation? Well, they can raise interest rates. Wait a minute. No, they can't. If they raise interest rates, they won't be able to service the debt. So what tools do they really have? They can raise interest rates a little bit without destroying the system completely, but if they try that, they're going to see the markets all fall. And if the markets fall from where they're perched, that's going to have a very negative effect on cryptocurrency because of the stage we're at in this particular bull rally. We've undergone a massive bull rally. Bitcoin is moving into bubblicious territory. And if tightening policies start to hit the monetary system, we could see that coincide with the ending of this bull market or bull market cycle. That doesn't mean Bitcoin's dead or anything like that. It just means that it could lose a percentage of its value. And rather quickly, too. So what timetable are we looking at for this to happen? Well, watch these percentages. He's telling you right here. 70 to 80% of the United States population has been vaccinated. Then they're going to think about tightening. Watch them numbers. Watch what percentage of the United States population has been vaccinated. Watch that. And that's going to be a signal for when the Fed might start their next tightening schedule. And that tightening schedule could very well coincide with Bitcoin coming to the end of this bull rally and being at a very high, at setting new highs possibly even. And then boom, the Fed tightens, and what happens? Bitcoin goes out of this bull rally ends, and we go into one of these periods of malaise where Bitcoin the price stays down for quite a long period of time. I don't think it'll be as long as the period of time from 2017 when Bitcoin went up to 20,000 and then it fell off and it was in malaise for a very long period of time before we went into this present bull rally. I don't think it's going to be that long between the end of this bull rally that we're in now and the beginning of the next one. But I'm going to tell you guys something and why this is so important to you. Is the next bull rally, not this one. This one's going to end. Bitcoin's going to go down into a slump. It always does. It's the next bull rally, the next big bull rally out there in the future is going to, I believe, be the big one. The big one. Right? And so what would happen if if the Fed does tighten and Bitcoin falls off massively? What does that do? Well, it means you're going to be able to get an awful lot cheaper Bitcoin at that point. And then we're going to head toward the big one. You know? So you got to keep these things in the back of your mind, guys. Because this is important for you as a cryptocurrency investor. Now, what about gold and silver if the Fed tightens? I don't think it's going to be affected as adversely. Yes, I think it might be affected a little bit adversely, but not like Bitcoin and cryptos. You see, and the reason why is gold and silver costs money to get it out of the ground. Costs a lot of money to get it out of the ground. Diesel fuel. They have to spend an awful lot of diesel fuel to dig the ore out of the earth, and then they have to crush it all down and pulverize it and everything else. Big rock crushers and conveyor belts and everything else. And it costs about $20 to get your silver coin into that 1 ounce form. You know? That's what the miners, that's what they have to pay. And so with gold, it costs over $1,000 to get the coin into that coin form. And so how much can gold and silver get chopped? Not that much, because it'll fall below mining production cost. And if it does fall below mining production costs, there won't be any available for industry, especially with silver. So, you know, cryptocurrencies could, I mean, they can lose 50%. You know, but take silver for instance. Right now, at a price of $26, can't lose 50%. Because if it does, there won't be any being mined. It's as simple as that. If you chop silver in half, there won't be any being mined anymore. So you got to think about these things too, you know, when you're making your consideration of just exactly what you're going to buy right now. Do I think right now is a good time to buy into cryptocurrencies? Not particularly, to tell you the truth, in my opinion. Right now is a great time, I think, to buy into possibly, I think that precious metals is where you possibly should look right now, and wait for this next big fall off in the cryptos that'll create buying opportunities. And you can see the handwriting on the wall for it right here. St. Louis Fed says that central banks could discuss a tightening policy once to 75%. And then when do they enact that tightening policy? Well, they could enact it very quickly. Once we see 75 or a little bit higher than 75%, 75 to 80% of the United States population has been vaccinated. They could instate these policies very, very quickly. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.